All right, let's jump right in. Today we're talking about a massive, seismic shift that's happening in commercial real estate. See, climate change isn't some problem for the future anymore. It's a very real force that's rewriting property values right now, as we speak. So, let's get into it.
So here's what we're going to cover. First, we'll look at the fundamental shift in risk that's really changing the entire game. Then, we'll break down the two different sides of climate risk you need to know about. We'll see how the market is finally waking up to all this, check out the new playbook that the winners are using, and then we'll look at the great divide that's creating a whole new class of winners and losers.
Okay, so first up, this fundamental risk shift. And really, this is the whole ballgame. This is the moment when climate change stops being, just a theory discussed in a boardroom and starts hitting your wallet, showing up right there on your financial statements.
And that brings us to the billion-dollar question that every single property owner has to ask themselves right now. The old mantra was always location, location, location. Well, that's being replaced with resilience, resilience, resilience. So is that building of yours an asset, or is it actually a liability just waiting to happen?
And this is really the heart of it. For years, climate risk was kind of like a footnote in an ESG report, a nice to have. Well, now it's the headline. We're talking lenders, insurers, regulators, the people who control the money and the rules. They're all asking these tough questions now, and that makes climate performance a make or break part of pretty much every single deal. Okay, so to really get a handle on this, you got to understand that there are basically two different types of climate risk. Think of it like two sides of the same coin, and both of them can absolutely hammer your property's value.
So on one hand, you've got physical risk. This is the stuff that's easy to picture, right? The things you see on the news. We're talking about the direct hits from things like hurricanes, floods, wildfires, but also the slow burn stuff like sea level rise and drought. But then there's the other side, and you really can't ignore this one, transition risk. This is all about the financial hit that comes when the world starts to change, when we shift to a low-carbon economy. So think new regulations, carbon pricing, and maybe the biggest one, those top-tier tenants saying, nope, we're not leasing in your building unless it's green.
And look, I want to be super clear about this. This is not some far-off, maybe someday problem. The market is waking up, and it's happening way faster than anyone thought. Let's break down the four big forces that are changing property values as we speak.
First off, let's talk about the insurance nightmare. Just look at this number. In high-risk places like Florida or California, we're seeing premiums jump by 200, 300, even 400%. And in some cases, insurers are just packing up and leaving entirely. And think about what that means. You end up with a property that's literally uninsurable. And if you can't insure it, you can't get a loan for it. Game over.
All right, number two, lenders are getting tough. The days of them just taking your word for it, they're over. Now they're demanding these really sophisticated climate risk reports before they'll even talk about a loan. And the result is simple. If your property is seen as high risk, you're either going to pay more for your money or you're going to get less of it. Period. Third, the regulators are here and they are not messing around. A perfect example is New York City's Local Law 97. Starting in 2024, they're handing out massive fines to buildings that don't meet their carbon limits. And don't think this is just a New York thing. We're seeing similar rules pop up in major cities all over the US and globally. Basically, governments are saying, upgrade your building or open your checkbook.
And the fourth force? It might be the most powerful one of all, your tenants. Just think about this for a second. A whopping 70% of big corporate tenants, the ones you really want, have their own net zero commitment. This is creating a huge flight to quality, where all the best tenants are flocking to green, certified buildings. And if your building isn't one of them, well, good luck filling that space.
So let's just put it all together. You've got these four huge forces, and every single one is a direct punch to a property's financials. Insurance costs are blowing up your budget. Lenders are tightening the purse strings. Regulators are hitting you with fines, and your best tenants are walking away. That is a perfect storm for destroying value.
And all of this leads to a really scary idea, this concept of a stranded asset. The analogy on the slide is perfect. Think about it. An old, inefficient building today is exactly like a big, old gas guzzler in a world that's going all electric. It might have been cool once, but now it can't meet the new standards, it's expensive to run, and its value is just plummeting. It's becoming obsolete right before our eyes.
Okay, so that's a lot of doom and gloom, I know. But here's the good news. The story doesn't stop there. The smartest people in the room aren't just throwing their hands up. No way. They're writing a completely new playbook with real, proactive strategies to protect their assets and, in some cases, even make them more valuable.
So, what's in this new playbook? It really comes down to 5 key moves. First, you have to assess your risk with real data. No more guessing. Second, you benchmark your building's performance so you know exactly where you stand. Third, you develop a roadmap to decarbonize that actually has a clear return on investment. Fourth, and this is so important, you engage with your tenants and get on the same page. And last, you stress test your insurance so there are no ugly surprises. You see the theme here, right? It's all about getting ahead of the problem instead of waiting for it to hit you.
And what does this look like in the real world? Well, it means that doing climate risk modeling before you buy a building is no longer optional. It's just standard practice, like checking the plumbing. It means decarbonization isn't some side project. It's a central part of your 5 or 10-year spending plan. And on a bigger scale, it means completely rethinking your portfolio. Smart money is getting out of high-risk assets and doubling down on resilient markets.
So, where is all of this heading? Well, what we're seeing is a massive split in the market, a bifurcation. It's creating 2 very different camps, the buildings that are ready for the future and the ones that are getting left in the dust. And this isn't just theory. The numbers are already proving it. Climate-resilient, future-proof buildings, they're already selling for a premium. The data shows it clear as day. They have better cap rates, which, in plain English, means that for the exact same amount of rental income, investors will pay more for that resilient building. That is a direct, measurable value boost. Meanwhile, the high-risk stuff, it's being sold at a discount.
And for anyone who's still thinking they can just ignore all this, the outlook is, well, it's not good. Your income is going to get crushed from every direction, you'll find it harder and harder to get a loan, and your building is going to become a dinosaur way faster than you think. It's a textbook case of value destruction.
You know, this quote on the screen just hits the nail on the head. The winners here aren't going to be the ones doing compliance theater, just, checking a few boxes to get by. No. The winners are the ones who make climate resilience a core part of their entire business strategy. It has to be in their DNA, how they invest, how they manage, everything.
So that brings us full circle. The rules have fundamentally changed. The old ways of valuing property just don't cut it anymore. So the final question you have to ask yourself is, in this new reality, what is your property's true value? It's a huge question to think about. Thanks for joining us for this explainer.